Purpose. The purpose of the Accounts Receivable Standard Operating Procedure is to establish consistent practices in invoicing, verifying, recording, and reporting receivable accounts to ensure timely payment by clients and minimize write-offs. Scope. This standard operating procedure defines the procedures including the responsibilities, internal controls, and authorizations for the accurate and timely preparation of client invoices, and the management of the accounts receivable created by these invoices for goods and services rendered by Arena Middle East and Asia. Applicability. The procedures defined in this document applies to the accounts receivable function. It is based on the support and services offered by the AR function to the finance and other Arena staff who are responsible for delivering the operations of Arena Middle East and Asia. Glossary of terms. Account receivable. Legally enforceable claims for payment held by Arena for goods supplied or services rendered that clients have ordered but not paid. Bad debt. An outstanding sum of money owed to Arena which has not been paid despite repeated efforts to collect the debt, or it is uneconomic to pursue the debt further. Credit guidelines. A set of formally agreed conditions to manage sales on credit arrangements between Arena and its clients, to minimize the risk of financial loss to the organization through non-payment of debts. Procedure. The accounts receivable procedure includes the 8 key activities as illustrated in Figure FN01.01 accounts receivable key activities given here. Each of these key activities are described in detail in the following pages. Establish or revise credit practices. The Finance Director is responsible for establishing the credit guidelines that define the general credit terms and conditions for the sale of goods and services offered by Arena to its clients. The guidelines must cover, at the minimum, the following items. Credit terms. These are standard terms of payment recognized by the Arena management for the sale of the goods and services to its clients. Credit standards. These are the criteria approved by the management for the purpose of shortlisting its clients for the extension of credit during a period. Collection policy. These are the procedures adopted by Arena to collect the amount from the debtors when such amount becomes due after the expiry of credit period. Establish or revise credit practices. These guidelines must be developed in consultation with the sales department and other relevant departments to reflect the prevailing market conditions. The Finance Director must ensure that the guidelines are approved by the management and communicated to the relevant teams. The Finance Director must approve all sale of goods and services that are not compliant with standards defined in the credit guidelines. The guidelines must be reviewed and updated every 6 months to reflect changes in the market conditions, business strategy, risk appetite, and financial health of the organization. Management for the sale of the goods and services to its clients. The credit terms should define the credit period as well as any cash discount terms, if any, to induce the clients to make the payment earlier than the expiry of credit period allowed to them. Register client and schedule invoicing once the sale is confirmed. The account manager responsible for the sale must notify the accounts receivable accountant about the sales confirmation and share a copy of the client acknowledged quotation or LPO. The account manager creates a sales order in the CRM and creates a new contract in the ERP. ARA must ensure that the client is registered in the client master data in Arena's ERP system. The client master data should include, in addition, the client details, the approved payment terms, billing contact information, and unique billing details or steps for the client, if applicable. Register client and schedule invoicing. If the client is not registered in the system, the ARA requests the account manager for the completed client registration form and copies of latest trade license and VAT certificate of the client organization. If the client is already registered in the system, the ARA verifies the client registration details and coordinates with the account manager for the relevant documentation if any updates are required. The ARA ensures the correctness of the project code in terms of the type of project and the entity in the ERP. The ARA captures the invoice schedule in the invoice schedule tracker based on the agreed invoice milestones, invoice amount, and due dates as indicated in the quotation. Prepare, issue, and manage client invoices. The ARA prepares the invoice based on the request received from the account manager and invoice schedule. Unless otherwise agreed, ARA should prepare and issue an invoice within 1 business day and no later than 7 days following delivery of goods or completion of service. A standard approved invoice template should be used for preparing the invoice. Supporting documentation should be included with the invoice and could include the items listed in Table FN01. 01. List of supporting documents for invoicing. For all invoices, the ARA prepares the invoices and emails a PDF copy to the client. Manage invoice disputes and amendments. ARA is the first point of contact for all queries in relation to outstanding invoices and payments. Credit notes should only be raised to cancel an invoice, either in part or in whole, which has been incorrectly raised due to the client returned goods or rejected services for any number of reasons. There was an overpayment on the original invoice. There was a mistake in price on the original invoice. RA must receive a request for credit note to prepare a credit note. Manage invoice disputes and amendments. The request must be checked and approved based on Arena's delegation of authority. Once approved, ARA prepares the credit note and issues the note to the debtor unless otherwise advised. Credit notes must not be raised to cancel an invoice due to the failure or refusal by a client or customer to pay an invoice that is properly due for payment. Manage accounts receivable reporting. The ARA generates the accounts receivable aging report on a weekly basis. 1 to 30 days, 31 to 60 days, 61 to 90 days, 91 to 180 days, 181 to 365 days, over 365 days. Follow-up for payment. The ARA follows up with the receivable accounts to collect payments for outstanding invoices remaining on the project's invoice aging report. ARA follows the escalation matrix to follow up on pending invoices and payments. The current escalation matrix is as indicated in Table FN0102 Escalation Matrix. ARA prepares and issues monthly statements to clients to keep the clients informed on their account balances. A late invoice notification letter is sent to all clients with outstanding invoices older than 30 days from the invoice date, and then subsequently after every 30 days until the invoice is settled or a write-off procedure is applied. ARA identifies outstanding invoices listed on the project's invoice aging report in each category that will require a letter. Verify and apply payments. ARA is responsible for receiving, verifying, and applying payments received via direct credit, cash, or check from the receivable accounts. For bank transfers, the ARA verifies the remittance details in the cash position report once a notification is received from the client or the account manager. For cash and check-based payment, ARA arranges for the cash or check to be collected and deposited in Arena's account. After verification of the payment, ARA posts a receipt voucher in the system and emails a copy of the voucher to the client to acknowledge receipt of payment. Once the payment is received, ARA updates the project invoice aging report. Payments received from a customer can be for numerous invoices and may be partial. Verify and apply payments. Where a payment is received specifying an invoice, the payment must be applied to the invoice specified by the customer, even if the payment is not the same amount as the invoice total. Where payment is received and no specific invoice is indicated, ARA contacts and clarifies with client regarding the invoices to which the payment must be applied. Manage write-offs. Employee or department head are not allowed to waive an uncollected debt without submitting a write-off request. Employee or department head may not reduce or cancel payments due from customers. A decision to write off a debt should be assessed in reference to the following. All attempts to locate the debtor have failed. When it is uneconomical or unreasonable to finalize recovery action due to the relatively small value of the debt or the potential cost to recover exceeds the initial debt. If the circumstances of a debtor at the time does not warrant the taking of recovery action or further recovery action, or where the debtor is bankrupt, in receivership or in liquidation. Manage write-offs. Bad debt provision will be reviewed every month and posted based on the following calculation. Any invoice aged over 180 days. 50%. Any invoice aged over 360 days. 100%. Exception. The regional leadership should be presented with a strong case providing an estimate of the probability that the aged amounts will be collected. Manage write-offs. Department heads should submit a write-off request to the finance director and regional CO for review. The request must include the following information: documentation that the collection procedures have been followed for the invoices being submitted for write-off. Documentation/description of collection efforts to date. Documentation that customer has been placed on hold and no additional credit will be extended to customer. Copy of bankruptcy notice, if applicable, confirmation from legal that all legal venues to pursue collection have been exhausted. Write-off requests are reviewed and approved following the arena's delegation of authority. See commercial matrix in arena delegation of authority. RACI matrix. A RACI matrix is a tool that clarifies roles and responsibilities in a project by designating who is responsible, accountable, consulted, and informed for each task. Please take some time to study this matrix for a clear understanding of team roles. Please review this RACI matrix carefully. Related documents and references. Here are a list of the documents referenced in this lesson. You can find these documents in the Arena SharePoint.